Welcome to another House of Wisdom video. Today we're going to talk about the happy place in the tax code. Let's face it, taxes stink. Nobody likes to pay taxes. But cheer up, there's a happy place in the tax code, a place where you can make money and the government doesn't tax you on it. In today's video, I'm going to tell you where the happy place in the tax code is and how to get involved with it. To be a spoiler, I'm going to tell you right off where the happy place in the tax code is, and that is long-term capital gains. That may be a founding word for many, but what are capital gains? Capital gains are gains that you make on any capital. For example, if you buy real estate and then sell it for a profit, that's a capital gain. Also, if you buy stocks or bonds and sell them for a profit, that also is a capital gain. If you buy anything and sell it for more than you bought it for, that's a capital gain. But what is a long-term capital gain? It's when you make a capital gain, profit on something, for an item that you've held for more than a year, more than 366 days. Here are the current tax rates for long-term capital gains. If you're single, you can make up to $38,600 in long-term capital gains without paying any tax. If you're married filing jointly, you can make up to $77,200. And anything above that, you're only taxed at 15%, up to the mid $400,000, of which you're taxed at 20% rate. Not taxing long-term capital gains is a relatively new thing. They used to be taxed at a lower rate, but in 2007 they were taxed at 5%, for example, for the lower 10 and 15% tax brackets. But since 2008, for the past decade, they've eliminated long-term capital gains for the lower two tax brackets. You've seen the tax brackets and how they were affected, but it gets better. If you have exemptions or deductions, you can make even more tax-free money. I've assembled three different scenarios. The first, a single person. The second, a married couple without children. And the third, a married couple with 2 children. I'm going to show you some data now. The tax summary is from H&R Block's 2017 tax software. Joe Blow now is making $48,000 a year. As you can tell, he's able to make more than the previous statement because he has some deductions and exemptions. He has over $6,000 in deductions, and over $4,000 in exemptions, which allows him to raise his income. The dirty secret is the following. If Joe Blow is a self-employed worker rather than having passive capital gain long-term income, his tax scenario is very different. Instead of paying $0, he'll pay $11,724, between 24 and 25% of his entire income. And on the next frame, you get the dirty details of it and how the government manages this. This is the 1040 on the H&R Block 2017 tax scenario. You can see on line 44, his tax is $4,668. But he has a self-employment tax of $6,782. With long-term capital gains, you don't pay any self-employment tax. That's only for earned income, and you don't have to pay federal tax either. The next scenario is a married couple with no children. And because they have deductions of $12,700 and exemptions of over $8,000, they have a higher number of income they can make in long-term capital gains. They can make $96,500 without experiencing any tax consequences. And then the next frame, we have a married couple with 2 children. And their deduction is a standard deduction of $12,700 also, but they have more exemptions because of their children. They have over $16,000 in exemptions. So this couple can make $104,500 and still pay no tax whatsoever, no Social Security or Medicare, and no federal tax, as long as it's long-term capital gains. Well, how do you get involved in making this tax-free money? There are 2 steps. First, you need to get a brokerage account. Most brokerage accounts charge you a fee to buy and sell stocks, but there are 2 exceptions. The first one is Robinhood. Robinhood.com. It offers free trades with no minimum balance, but you also get no customer service. You trade on your smartphone or you trade on the internet, but you don't talk to a broker. The second is Merrill Edge, which is a full-service broker. It offers free trades if you hold at least $50,000 with them. and there's a person to talk to if you have a question. The second step, now that you have a brokerage account, is you need to start investing regularly in one of the ETFs that reflect the market average. What is an ETF? An ETF acts like a mutual fund in that it holds multiple companies, but you buy and sell it like a stock without commissions or fees. Three of the broad market ETFs are DIA, which is an ETF for the Dow Industrial 30, some of the 30 largest companies in America, QQQ, which is an ETF for the NASDAQ 100, the 100 largest companies in the NASDAQ, and SPY, the 500 largest companies in the S&P 500. Well, what are the advantages to using ETFs? Firstly, they have lower fees than mutual funds. And because they don't buy and sell things, they keep their fees very low. The second advantage is that it's easier to diversify with an ETF, and being diversified is safer than buying individual stocks. For example, when a stock weakens, it is replaced by a stronger stock in an ETF. In 2015, Apple entered the Dow Industrials and it replaced the weaker AT&T. This protects you from holding a stock that goes bankrupt. The insurance giant AIG once belonged to the Dow. It left the Dow when it weakened, and later it went bankrupt. Investors holding AIG stock directly lost everything, but the investors holding DIA, of which AIG was a part, were not affected whatsoever. In summary, what is the happy place of the tax code? The answer is long-term capital gains. For single people, you can make $48,000 in capital gains annually without being taxed. For married couples without children, you can make $96,500 without being taxed. For married couples with 2 children, you can make $104,500 without being taxed. These are 2017 numbers. The numbers get even better in 2018. And how do you take advantage of this tax-free money? How do you make it? The first step is getting a brokerage account, either with Robinhood or Merrill Edge, and start investing regularly in one of the market averages, ETFs, like DIA, QQQ, or SPY. I hope this video has been helpful for you, but remember, use your wealth for noble purposes. We'll see you on the next House of Wisdom video.